You know, sometimes you just look at the market and you think, are you kidding me? Like up one day, down the next, and sometimes way down. And
Yeah.
it makes you wonder, like, what are we even doing?
Right.
And so that's exactly what we're going to dive into today. We're looking at an article from mapsignals.com called Rare Capitulation Signals, Big Gains Ahead for Equities.
Interesting.
It's by Lucas Downey, and it was just published yesterday, December 19th, 2024.
Okay.
And it basically says that when the market really, really drops,
Uh-huh.
that might be the best time to buy.
It's kind of counterintuitive.
It is. It's totally counterintuitive.
But there's some data to back that up.
Yeah, back.
And Downey points to a day just like yesterday
Oh, really?
when the market just really tanked.
Yeah. Well, and it's interesting because the numbers were kind of crazy yesterday. The S&P Small Cap 600 dropped 4%.
Wow.
Mid caps weren't much better. They were down 3.84%. And
Wow.
even the S&P 500 dropped 2.95%. So that's a lot
That's a big drop.
in one day.
Yeah, makes you sweat a little bit.
Yeah.
But this is where understanding capitulation is really crucial.
Okay. So,
It's not just a downturn, right? It's a phenomenon
right.
that has its own kind of aspects to it.
So break that down for me. Then what is capitulation? I mean, is it just basically giving up on your New Year's resolutions or, what is it?
Well, not exactly, but it's kind of like peak fear, right? So investors are so panicked, they're just selling their stocks no matter what the value is.
Hmm.
So it's not even like they're thinking straight. They're just like, get me out.
Yeah, just get me out of here.
It's like cleaning out your fridge.
Right.
And you just toss everything, even that thing that you think, well, maybe I'll use that someday.
Oh,
You just get it out of there.
that jar of pickles that's been in there for like 3 years.
Exactly. But the interesting thing is that creates some opportunities.
Yeah, because and Downey points to some data from December 18th where 96.8%
Wow.
of the map signals buy and sell signals were sell. So 334 stocks were being liquidated versus only 11 being accumulated.
So if you think of a pie chart
Right.
and every sector is represented in that pie chart,
Mm-hmm.
financials, tech, industrials, everything is red.
It's all red.
That's a pretty clear sign that we're dealing with capitulation.
So he didn't just stop there, though, did he? He actually went back and looked at historical data to see what happens after these big sell-offs.
Right. He looked at 58 similar events since 2012.
And what'd he find?
And what he found is pretty amazing.
Yeah.
These times of extreme fear
Uh-huh.
are actually a really strong indicator of gains.
Really?
3 months after a major sell-off, like the market on average goes up 8% or more.
So you're telling me that when everybody's running for the hills,
Yeah.
that I should be thinking about buying?
Well, it's a counterintuitive idea.
Yeah.
The market tends to overreact to bad news, and the panic creates opportunities for people that are a little more contrarian.
Just like a clearance sale.
It's exactly like a clearance sale.
Yeah.
You got to think of it that way.
It's when everything's marked down and then you get to
Right.
rush in and grab it all.
Exactly. And that's where you can get a disconnect between price and actual value.
Hmm.
Some good quality companies get punished
Mhm.
just because everybody is afraid,
Interesting.
and so their prices drop and they're actually a good value.
Hmm. So if this is like a clearance sale, what should we be looking for?
Well, that's where Downey's analysis gets really interesting. He breaks it down by market cap,
Okay.
and he finds that large cap stocks, they tend to bounce back pretty well.
Uh-huh.
But the small caps and the mid caps,
Yeah.
those are the ones where you can see some real fireworks.
And he had some impressive numbers in there. I mean,
Yeah.
we're talking about potential gains of 21% for large caps
Right.
a year out. But then mid caps are 26%
Uh-huh.
and small caps 28%.
Hmm.
So
Yeah.
why is that? Why do the little guys bounce back so much harder?
Well, you got to think of it like this. Smaller companies, they can be a lot more agile.
Mm.
They can respond to changes more quickly.
Mm.
And a lot of times their growth potential is actually higher than those larger companies.
So they're kind of like the speedboats in the ocean. I
Exactly.
can turn a lot faster than the
Right.
big cruise ship.
Exactly. And because they often get hit harder
Yeah.
in the downturn, their recovery is even more dramatic.
So it's not just about going out and buying anything that's small.
No.
It's about finding those small companies that have got good fundamentals.
Oh, exactly.
That are poised to really take advantage when things turn around.
Don't forget, investor psychology plays a role in this too.
Oh, so?
So during a downturn, people flock to those big familiar names.
Yeah.
The companies they think are safe.
Uh-huh.
But then as confidence returns,
Yeah.
they start to look for those growth stories again.
So those small and mid caps start to
Sure.
shine a little bit brighter.
They get back in the spotlight.
Yeah.
So yeah, they might take a bigger hit initially,
Uh-huh.
but they're in a better position to outperform.
Man, this is really making me think differently about market volatility.
Yeah.
It's not just something to be scared of. It's like,
Right. An
Mar-
opportunity.
exactly, you buy low and then ride it back up.
Exactly.
The key takeaway is there's no guarantees in the market, of course.
Right.
This analysis that Downey did is based on historical trends.
Mm-hmm.
The past doesn't predict the future,
Right.
but it gives us some clues.
Yeah. So we're not saying
That's right.
throw caution to the wind, just go out and buy everything that drops.
No. You still got to do your research.
Right.
You got to look at the fundamentals of those companies.
Yeah.
But understanding this idea of capitulation, I think, can help you make better decisions.
Okay. So we've talked about the theory. We've seen some of the data.
Right.
We know there are some potential rewards here. But the question is, how do we put this into practice?
Yeah.
How do we spot those outlier stocks, the ones that Downey says are poised to just take off?
Well, that's where things get a little more nuanced. And again, we always got to say this is not financial advice. Right.
Every investor's different.
Right.
You got to think about your own goals, your own risk tolerance, how much time you're going to be investing.
We're just kind of exploring ideas here, right?
Exactly.
Just trying to figure out what the market's doing and why it's doing what it's doing.
Right. But there are some principles we can apply.
So what's the first one?
Focus on companies with a proven track record. Look for strong management teams, good financials, and a competitive edge.
So not the latest trendy thing,
Exactly.
but companies that have been around that have a history of.
Solid companies built to last.
Yeah.
Look for companies with a history of weathering the storms.
Okay.
They might not be the flashiest names, but those are the ones that are probably going to reward you in the long run.
So solid foundation. Okay, what else?
Well, remember that pie chart where everything's red?
Yeah.
Downey's talking about widespread selling.
Uh-huh.
Those are the times when the opportunities are really there.
So we're looking for those companies that have been unfairly punished by the market.
Exactly.
The ones that everybody's kind of overlooking.
Those are the diamonds in the rough.
Yeah.
But remember, diversification is key.
Right.
Don't put all your eggs in one basket.
Yeah.
Even if it looks like a golden egg,
Right.
spread your risk across different sectors.
Okay, so we're looking for a solid track record, good management, competitive edge,
Right.
and a price that seems like it's way out of whack with what the company's actually worth.
A disconnect between price and value.
But this is a lot of work.
It is.
I mean, this is like
Yeah.
analyzing all these companies, tracking all these market trends.
Right.
It's overwhelming, especially for somebody who's not a financial expert.
That's why having the right resources and support can be really valuable. Could be a financial advisor, a research platform, a community of investors. Just having that network
Yeah.
can make the journey less daunting
So it's like having somebody that knows the jumble. Right.
and can kind of guide you through it.
Precisely.
Don't have to go it alone.
And you might even enjoy the adventure along the way.
You know, this is really making me feel a lot more optimistic about market volatility.
Good.
It's not just this scary monster out there. It's like a
Well,
potential opportunity.
Yeah, exactly.
It's in disguise.
And even if you don't have time to become a master stock picker, just understanding this idea of capitulation
Right.
can make you a more informed investor.
So the next time the market throws a fit,
Yeah,
we'll be ready to grab our shopping list and see what's on sale.
that's right.
But for now, let's take a break.
Okay.
And we'll come back and talk about how we apply this to our own investment strategies. All right, so we've been talking about this idea of capitulation and how all this fear in the market can actually be a good thing.
Right.
But how do we use that?
Yeah.
How do we as investors actually take advantage of that?
Yeah.
I mean, it's one thing to recognize it.
But when you see your portfolio dropping like a rock, it's hard to actually do something about it.
Yeah, that is the real challenge, isn't it?
Yeah.
It's so easy to just get caught up in the moment
Right.
and panic.
Yeah. And just sell everything.
Exactly. But that's when you need a plan.
So what's the first step?
You got to have a plan even before you think about buying or selling anything.
Okay.
What are your investment goals? What's your risk tolerance? How long are you planning to invest?
So it's kind of like building a house. You got to have a blueprint.
That's a great analogy.
Otherwise, you're just going to end up with a pile of lumber.
Exactly. Your investment plan. That's your blueprint.
Right.
That's what keeps you on track.
Okay, so we got our plan.
Right.
Then the market just tanks like it did this week.
What do we do?
That's when you got to have a trusted source of information. Could be a financial advisor, a research platform,
Yeah.
maybe a group of other investors.
The important thing is you got to have somebody or something
Mm.
to help you understand what's going on.
Right. So you don't just make a decision out of fear.
Exactly.
So it's like having that co-pilot in the cockpit,
Right.
when the weather gets rough,
Exactly.
they can help you navigate through it.
And a good co-pilot will not only help you avoid mistakes,
Right.
but also help you find opportunities.
Right. Because when the market's down, that's when there are some bargains out there.
That's right.
Which brings us back to those outlier stocks that Downey was talking about.
Right.
The ones that are going to bounce back when the market recovers. How do we find them?
Yeah, that's the challenge, isn't it? It's like looking for a needle in a haystack.
Yeah.
But that's where your research comes in.
Okay.
Remember those criteria we talked about? Strong management,
Mm-hmm.
solid financials, a competitive edge.
Those are the businesses that are built to last.
Exams.
They can make it through the tough times.
Right, and when the market's down, that's your chance to go bargain hunting.
Mm.
Look for those high-quality companies that have been unfairly punished.
So, like, when everybody's panicking and running away, that's when we should be looking around.
That's when you want to be looking for the bargains.
Yeah.
And remember, diversification.
Right.
You don't want to put all your eggs in one
Or
basket,
put all your eggs in one basket. That's right.
even if it looks like a golden egg.
Even if it looks like a golden egg.
You
Okay.
spread your risk around.
This is a lot, though. I
Uh-huh.
mean, all this research and analysis,
It is.
it's a little intimidating for somebody who's not, like, a professional investor.
It can be,
Mm-hmm.
but there are a lot of resources out there to help you.
Like what?
Well, there are websites,
Mm-hmm.
books you can read,
Right.
online communities you can join.
So there are ways to kind of learn this stuff.
Exactly. You can learn from other people's experiences.
So understanding how the market works is important,
Yeah.
but having a plan, being informed,
Right.
getting advice when we need it.
Absolutely. It's
Yeah.
all about taking action.
Well, I gotta say, what started out as a conversation about something that I was kind of scared of,
Uh-huh.
this market crash.
Right.
I'm actually feeling a lot more optimistic about it now.
That's great to hear.
Yeah.
Remember, knowledge is power.
Mm.
The more you know about the market, the better decisions you're going to make.
So to all of our listeners out there, the next time the market takes a dive,
Yeah.
take a deep breath, look at your plan, and see if maybe there are some opportunities out there.
Some bargains to be had.
Yeah. And
Amazing.
always remember, do your own research.
Always do your own research. That's right.
Well, this has been a great conversation.
Yes.
We really appreciate you joining us for this deep dive.
Yeah. Thanks for listening, everybody.
And we'll see you next time.